Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. As the economy has improved and we haven't fallen into the recession that everybody predicted for 2023, growth stocks are back again. Investors are pouring money back into the companies that are growing the fastest. And there are three that have really caught my eye that I continue to think are great buys for 2023. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, in the show notes for more phenomenal growth stocks. And I've got a deep dive on one of these companies coming later this week. I want to start with a company that came public not too long ago, and that is On Holdings. On Holdings is the company behind the brand On. That's where the name comes from. And this is a really rapidly growing fashion brand. Started with running shoes, has moved into other shoes like casual and tennis, and then apparel, all kinds of other products. They're really trying to stake out a place in the high-end market, very, very good margins. And you can see here that growth is just phenomenal. Over the last 2 quarters, year-over-year growth has exceeded 75%. The orange line here is the company's revenue, more than doubled just since the middle of the year 2021. Just phenomenal results. And right now, it doesn't seem like there's anything that's slowing On down. The company's brand is getting more recognition. You probably see it more and more in your life. And if you haven't yet, my guess is you probably will. It's popular around the world, started in Europe, very popular in North America, but it also has a big business in China and the Middle East. So really a global brand and really early in its growth history. The company has about a $10 billion market cap. It's only slightly profitable, about $92 million in profit over the past year. But I think this is a company that can grow at a very rapid rate for the next 5 to 10 years. Maybe not 75%. That would be a little bit crazy. But if it exceeds 25, 30% revenue growth, this could be a phenomenal investment, especially if management is able to keep operating costs relatively low and gross margins relatively high. Investors aren't getting a steal with On Holdings, but they are getting in early in the growth trend. And history tells us, especially in apparel and fashion, if you're early in the growth trend, that is the time to be buying these kinds of stocks. That's why I really like On Holdings. The second one I highlight is Airbnb. This is one that's much bigger, much more well-known, but you can see here that the numbers are really great for Airbnb. Revenue continues to grow in excess of 20, and you can see the most impressive thing here is the blue line. That's free cash flow. Management really cut costs during the pandemic. Early in the pandemic, Airbnb was in a lot of trouble, had to raise outside capital, but that was a short-term headwind, and they were able to really right-size the business. And now we're starting to see the operating leverage from those cost cuts. A little under $9 billion in revenue over the past year, but nearly $4 billion in free cash flow. That's just a phenomenal conversion of revenue to free cash flow. And the beautiful thing about this business is it's asset light. They don't actually own the properties that they have on Airbnb. They're just the middleman between the property owners and the people who are staying in those properties. So very valuable position. Platform company, should be very high margin. And as long as they don't increase their take rate too far, that means the percentage of the bill the customers are paying that's going to the property owners, as long as they don't take too high a percentage of that, you want to maintain that in a reasonable level in the 20% range if you're a platform company. As long as Airbnb doesn't push that too far, I think this is a company that could still grow significantly over the next decade. May hit some headwinds here as people start traveling a little bit less in 2023 than they did a year ago. But long term, the trends are absolutely moving in the right direction for Airbnb. And the final one I want to highlight is Wynn Resorts. As much as gambling has exploded in the US in the last couple of years, and Las Vegas in particular has reported record gambling revenue over the last 2 years. There was a lull early in the pandemic, but Las Vegas specifically recovered extremely quickly. What didn't recover quickly was Macau. This was the largest gaming market in the world, about 6 times the size of the Las Vegas Strip prior to the pandemic, and it went to almost zero. Revenue was down about 90% throughout most of the pandemic. But late last year, early this year, China really ripped off the Band-Aid, ended its zero COVID policy, and that has allowed Macau to grow at a really rapid rate. I want to show the direct numbers from Macau. This is the gambling revenue for casinos in Macau on a monthly basis. And you can see 2023, April, May, and June, which is going to be the second quarter, was up nearly 50% from the previous quarter and is up huge from a year ago, 514% growth in June. And now this is from a relatively low base. So keep that in mind. The year over year numbers are not necessarily what you want to look at, but quarter over quarter is going to be phenomenal growth for Macau. And this is really the cash flow machine that drives companies like Wynn Resorts. Wynn has 2 casinos there. Each of those casinos could generate over $1 billion in EBITDA, or a proxy for cash flow from a casino or resort. So if revenue recovers to where we saw it just a few years ago, this could be a phenomenal cash flow machine, a phenomenal growth story for the next few years. And I think even the second quarter is going to be a lot better than investors are expecting. So the 3 stocks I covered here, On, Airbnb, and Wynn Resorts, what do you think of those? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.